Hey guys. All content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Not a lot happened today. We saw stocks decline in value after yesterday's bull rally. I would say people that bought in began to have second thoughts, as CPI at 8.5% is nothing to brag or rally about, especially when the rest of the economy continues to look dire and in a poor state. Regardless of what analysts or the corporate media tell you, the same risks that were present in June still remain the same, if not worse, right now. We have the war in Ukraine. China is a huge question mark. Rents are rising. Furthermore, producer prices excluding food, energy and trade increased. The Producer Price Index, another important economic data measure, was released today and almost nobody is talking about it, so let's give it some attention. The Produce Price Index for final demand decreased 0.5% from a month earlier. This pullback happened because of a decline in the costs of goods. Excluding volatile food and the energy components, the core PPI rose 0.2 in the month of July, remaining 7.6% up from a year earlier. Figures suggest pipeline inflationary pressures began to ease a bit, but nothing worth a bragging right. 80% of the decline in goods prices was due to the decrease of 16.7% in gasoline prices. Services prices did see an increase of 0.1%. Costs of processed goods for intermediate demand fell 2.3%. At best it was a mediocre month on July, and at worst it pronounces just how stuck in inflation we are. GameStop and AMC had no news today. We saw a lot of strength come from AMC as it rose and closed above $25. GameStop closed losing over 2%. AMC is simply just the champion of the memes at the moment, being by far the most volatile one. Dark pool trades reported for AMC accounted for 59% of the total volume today, while dark pool trades for GameStop accounted for 45% of the total volume today. I wanted to make today's segment about the current rental nightmare that the United States is going through. We saw the CPI report show just how renting and housing prices are making overall recovery impossible, and we need to hone in on this now more than ever because the housing market has the real capability of pushing us back into a recession. Big shout out to Bloomberg again for their great article about the snowballing rental crisis, which inspired me to make this whole segment about it. As you know, and we have discussed for months, rental costs are soaring at the fastest pace in more than 3 decades. The media cost of rent has finally gone over $2,000 per month for the first time in history, pushing rent costs above pre-pandemic levels in major cities, which is a huge problem because as time goes by, people are centralizing around big cities for job opportunities. However, the rental market spares no one, because even though we see metropolitan areas affected the worst, citizens in rural areas too are getting clapped just as hard too. Demand simply is too high, and Wall Street and private equity firms are paying politicians to slow down construction as much as possible. This allows them to excuse the ridiculous rents they impose. This is resulting in would-be homebuyers being forced to back out of deals, especially now that the Fed began to increase the interest rates. To throw some numbers at you, single-family rents rose by a record of 14% nationally in May. The increases were more dramatic in cities more popular as living destinations such as Miami, which saw rents rise by 40%, or Orlando, which saw rents rise 25%. Adding fuel to the nightmare, 40% of households that are not current or up to date on their rent say they're likely to be evicted or foreclosed on in the next 2 months. Given the high cost of living along with the gap in wages, it really sets people up for failure. You get into an accident or get laid off and overnight your life gets turned around. You get kicked out of your place if you don't find a job fast, and the problems add up. Data figures are also showing more renters than usual are staying put in their homes too. Looking at rent combined with fuel and food costs, and things all get really ugly. The census survey from June 29 through July 11 showed that 30% of Americans said they had used a credit card or a loan to meet spending needs, which was up from the 23% found in January. If things keep going at this pace, we could easily have 50% of all Americans having used a credit card or loan to be able to live. The reason I wanted to talk about this is because when you look at these things, at the facts as they are, and then look at the contrasting picture of a strong bounce in the stock market, it honestly leaves you scratching your head. Even I was just astounded to see how well stocks are performing when literally nothing about this last CPI or PPI report showed real progress. People are getting kicked to the curb. Americans forced to get loans or use credit they were unsure they might not be able to pay back in time, and the stock market reacts completely and unashamedly as if nothing is going on, as if the building is not on fire. Keep that in mind in the months to come, because sooner or later, the market will be forced to meet reality face front, and when it does, things are going to be dripping red. That was pretty much all I had for you guys today. It was a very uneventful day overall. GameStop was falling and AMC continues to push up. Whatever happens, I don't really care. Sooner or later, I think AMC is going to go down again, and that is not a bad thing. I continue to hoard GameStop in particular, though I am waiting for a good dip, preferably under $36 before I start buying in big chunks again. Let me know in the comments if you guys are buying or just holding for now. Come over to my Discord and check it out. Other than that, I hope to see you tomorrow. Enjoy the rest of your day and to the moon.